The world is moving away from the US dollar, and it's happening faster than anyone expected. From energy giants like China to rising powers in the BRICS bloc, nations are increasingly looking for alternatives. But why now, and what does it mean for the future of global trade? For decades, the US dollar has been the bedrock of international trade, finance, and reserves. But today, the tide is turning. In this video, we'll explore the underlying causes of this global de-dollarization and how it could reshape the international economic order. Make sure you stay till the end to fully understand these critical changes and their potential impact on your financial future. Before we dive deeper, don't forget to like this video if you find it insightful and share it with others interested in the changing global financial system. For much of the 20th and 21st centuries, the US dollar has held a dominant position in the global financial system. This status grants the United States what many call an exorbitant privilege. The term describes how the US can essentially finance its vast military and global operations by printing money, knowing that the demand for dollars will remain strong around the world. In essence, every time the US finances military bases or international ventures, countries like China, Singapore, and European nations are indirectly footing part of the bill. But this privilege is now being called into question, not just by America's rivals, but even by its trading partners. Is the era of unchecked dollar dominance nearing its end? One key reason for the shift is the increasing weaponization of the US dollar. George Yeo, Singapore's former foreign minister, argues that the US has been using its currency as a geopolitical weapon, enforcing sanctions that force countries to align with US interests, often at the cost of their own national priorities. Countries subjected to US sanctions like Russia, Iran, and Venezuela have felt the brunt of this weaponization, and the sanctions placed on Russia following its invasion of Ukraine in 2022 have pushed many nations to reassess their reliance on the US dollar. The US Treasury's decision to freeze Russia's dollar reserves in the wake of the conflict sent a clear signal. Your reserves are only safe as long as you remain on good terms with Washington. If you are finding this breakdown of global trends insightful so far, hit that like button and don't forget to subscribe to the channel for more analysis on the global economy and geopolitics. The imposition of sanctions on Russia didn't just hurt Moscow, it sent ripples through the global financial system. Nations with complex geopolitical interests such as China and the Gulf states took notice. Today, Russia now conducts around one-third of its international trade in Chinese renminbi, and trade between China and Russia increasingly relies on their international currencies instead of the US dollar. These moves away from the dollar are not isolated incidents. In March 2023, China made its first gas payment to the United Arab Emirates in its own currency, the yuan. China and Saudi Arabia, too, have signed currency swap agreements to facilitate more trade in their respective currencies, bypassing the US dollar entirely. Another critical indicator of this shift is the declining share of the US dollar in global foreign exchange reserves. 20 years ago, over 70% of global reserves were held in US dollars. By the end of 2022, this figure had fallen to less than 60%, marking a significant erosion of the dollar's role in global finance. This trend reflects a deeper desire among nations to diversify their reserves and reduce exposure to the US dollar's influence. Central banks are increasingly stockpiling gold, euros, and other currencies to hedge against geopolitical risks and the uncertainty of US fiscal policies. What do you think? Could this trend of diversifying away from the US dollar accelerate even further? Let us know your thoughts in the comments below. Another factor fueling this shift is the rise of emerging economies. The United States' share of global output has been steadily shrinking, while countries like China have rapidly expanded their economic influence. Today, China is the largest trading partner for over 120 countries, with annual exports totaling more than $3.6 trillion. The rise of the BRICS nations, Brazil, Russia, India, China, and South Africa, further complicates the dollar's dominance. BRICS countries have now overtaken the G7 in terms of their share of global GDP when measured by purchasing power parity. By 2024, BRICS nations are expected to hold 35% of the global GDP compared to the G7's 30%. This is a major shift in global power dynamics. As BRICS and other nations gain more economic clout, they are not just interested in reshaping trade, they are actively working to reshape the global financial system. Do you think BRICS can successfully challenge the G7 and shift global power in their favor? Share your perspectives in the comments. Amid these global shifts, the US is also grappling with its own economic vulnerabilities. The national debt has soared to over $35 trillion, an amount equal to 123% of its annual GDP. The United States debt obligations, coupled with inflation and rising interest rates, are increasing the cost of servicing this massive debt. Some economists even warn that a potential US debt default could destabilize global markets, further eroding confidence in the dollar. Despite these challenges, the US dollar remains an incredibly powerful force in global finance. It is involved in 88% of foreign exchange transactions, making it the most widely used currency in global trade. Additionally, central banks around the world still hold the majority of their reserves in dollars, although this dominance is gradually waning. While the US dollar still reigns supreme, the rising discontent among countries seeking to reduce their dependence on it suggests that the global financial system could evolve into a more multi-currency world in the near future. As non-Western countries gain more influence and global power dynamics shift, we could be witnessing the dawn of a multipolar financial system, a world where trade is no longer dominated by the US dollar, but rather a combination of currencies from different power centers like China, India, and the BRICS nations. What does this mean for global trade, financial stability, and international relations? Only time will tell. But one thing is clear: the dominance of the US dollar is no longer guaranteed, and the global economy is on the brink of a transformation. If you found this video insightful and want to stay updated on how these trends continue to unfold, make sure you hit the subscribe button and ring the notification bell. Don't miss out on more in-depth analysis on the global economy and geopolitics. Thank you for watching, and we look forward to hearing your thoughts in the comments below.